Hey guys, Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are new to the YouTube channel, welcome. There's a lot of really cool trading content here on the channel, but this video in particular is the one that I try to put out each and every weekend, sharing with you the top trading opportunities on my radar for the week ahead. Now, as it's been for the last, I don't even know how long now, few months, it's been a very wacky time in the markets where we're seeing jumps all over the place based off of risk on, risk off behavior, which is based off the Iran war. And we saw that at the end of the week with the blockade and ceasefire that maybe now not a ceasefire and all that fun stuff. So just keep that in the back of your mind that there are fundamental drivers that are going to cause crazy reactions in the market. But what I want to give you today is really a few opportunities taking advantage of both sides of the equation. So both shorts and longs, and of course, using technical analysis. So we're going to start here on the euro dollar, which is the fan favorite pair, the most popular pair. I'm not really a big fan of the euro dollar personally, performance wise, but you guys love it and you ask about it. So we will start here. Now, if you remember last week, we did a nice video here talking about a structure-based trade on the euro dollar. And despite a little jump in violation of our double top, we've then sunk in right back down and put ourselves back in a very similar position to where we started with, where we had our radar on shorts. So pretty much, right, I'm not going to do the whole video over again, but this was the main level that we were expecting price to go to, this little bit of consolidation. So you can see the level where price came up, and then we kind of danced around within this channel before breaking out. Previous structure resistance was violated, and we would now look for it to act as structure support. And as you can see, this is a very big zone. So the question is, well, Keel, where in this zone should I expect price to go to? And with the help of some fibs and some volume and some psychological stuff, we decided, or I decided, well, I guess we was doing this in the live room, that 117, that even handle, 117.00, would be the first place that we would expect price action to go. Now, as I mentioned, after coming off our double top here, right, we then violated to the upside. Let me get this thing out of here, get up there, invalidating the double top. But now that we've come back down and violated these lows, that short prediction is back on. So I am looking for a move here on the euro dollar down to the 117 even handle. Again, it can come straight down. Me personally, if I want to trade it, I need to see a pullback first before moving down. But this will be the next level in which I expect price to go to. Next up is going to be the euro yen, and we're going to look at a bullish opportunity here. So just like the euro dollar and many pairs out there, we saw a little bit of a nosedive ending the week, and we ended with our last candlestick, at least here on the 4-hour, being an inside bar. So what that means is that this candlestick completes, completely within the range of our previous candlestick here, giving us a sign of consolidation. This is also 2/3 of one of my favorite reversal patterns in the market, which is called a 3-bar reversal. In a 3-bar reversal, what we're looking for is a high momentum candle right here. This is this red one. It's high momentum because it is very big in comparison to the previous candles. We are then looking for either some type of indecision candle or some type of rejection candle. So we have that right here at the inside bar. And the final part of this process, and this is what we would be looking for on the open, words, right? It's been a long day, would be a higher high, higher close candle. So a candle that breaks and closes above the extreme of this candle. If we can get that, that is a decent sign that price is likely to reverse up higher. If we are going to reverse higher, where would I expect us to go to? Back up into the same consolidation zone that we came from before. We are not in a trend continuation setup. If you go, I'll just do it for you. If we go all the way to the weekly, right, although, and this is the power of perspective, although here on the 4-hour, it looks like, hey, we've been in a nice bullish trend. If we take a look at the land, right, and see where we're actually trading at, we're actually still at a previous level of structure from back, was it 1996 if I remember correctly? No, 1990s, even further, right? So no, it's not, before you ask, right? Going back to 1990 isn't too far back. The date doesn't matter. What we're looking for is the relevance in the structure. So the fact that this is the most relevant outside level of structure, even though it's in 1990, it is still going to be important. And going back to our basic rules on trading, right? You can see that we have not broken and closed beyond that level. We come right up to it. So unless we do that, I cannot predict an extension higher. So that's why my projection is only a retest of this consolidation zone. Dollar Canada is going to be next, and this is going to be another good example of a higher high, higher close. If we look at where price action has come to here on Dollar Canada, you can see we just came to a previous level of structure. Look left, structure leaves clues, and we put in a nice higher high, higher close. So as the RSI went massively oversold, we came down, we put in a nice indecision candle right here, and then we ended it with a higher high, higher close candle, confirming that the bulls won that session. Now, the next question is, if price action is likely to go higher, where are we likely to go higher to? I would say this level right here, this little ice zone, so a previous level of structure support, which was broken and acted as resistance, is a good level to look for. Now, two options here as far as this trade, right? One, you can buy it at market if you are aggressive, and obviously this meets your rules for entry, but I'm not sure if you're going to get the risk profile that you like. So let's just measure this out. If we're using a basic ATR stop, someone had a question about ATR stops, so here's a perfect example. Someone asked a question, I said, well, if you just watch every single YouTube video I do, you'll learn about it, because this is my personal way of setting stop losses, but here's a lesson just for you. What I want to do is I want to take my ATR, my average true range, which is going to be 19. I'm going to subtract it from the bottom, which is 136.49. Ooh, easy math. That's going to be 146.30. So my stop loss for this trade, if I were looking to get long, would be right about here if I'm using a single ATR. I can then, right, I already know my target projection. I can then take out my little risk reward deal here and see if I get that 1-to-1 risk reward requirement. So I see that my reward is up there, my stop is right here, and I say, oh no, this is less than 1-to-1. Now, there's nothing wrong with less than 1-to-1. You can certainly be a good trader with a negative risk reward profile on average, especially if your win percentage is really good. But for me personally, aside from a single strategy that I trade, I need more than a 1-to-1 because I am only about a 55 to 60% trader. So if I'm a 55% trader with a consistent risk reward that's in the negative, it's going to be very hard for me to make money. So I do need a positive risk reward. So although this is a decent opportunity, right? The entries make sense. The stops make sense. The targets make sense. I just don't have the risk profile. So I have two options. I can either rip up the trade and throw it away, or I can go to my plan B. So plan B would be looking for a double bottom. So if price action returned to this level for a second test and we held, that would give me the opportunity to get involved. Now, I don't know where this double bottom would be at, obviously, but let's just say we get a close somewhere in here. Now you can see that my risk profile is a lot better, and now I would be able to take the trade. Hooray! So here in the Aussie dollar, we're seeing a very similar action to many of the pairs out there. Again, it's a dollar cross. And well, if you guys remember the podcast we did a while back, we talked about, hey, the positive war talk, negative war talk, meaning that more war equals strength for dollar, less war equals weakness for dollar. So as we get ceasefires and as we get the Strait of Hormuz being opened and closed back and forth, we're going to have some risk off, which means dollar strength until we get risk on. So again, the markets have been bouncing up and down, and this is the perfect opportunity to expect consolidation. And if we expect consolidation, we have a decent pattern that could be forming here. Now, recently in our live trading room and in the Q&As, we've been playing this game called Pattern or No Pattern, where the traders on the platform that are working on certain strategies, they send me screenshots, and then we bring it up to our group for a live discussion, and then we vote on it and we share opinions, and it's been a really, really good way to learn. This is an interesting one because I can see, if I put my eyes in your eyes, I can see two different ways to interpret this. So I want to share both of them with you, and I would love you guys, the YouTube audience, to play this game with me as well. So in the comment section below, I would like you to tell me which of these would be the clearer pattern for you. pattern A or pattern B. So pattern A, we're going to take the bigger move of this as being our X leg. Let me just kind of get me more real estate here. Boom. And we're going to start with our initial move. This is going to be our swing low to swing high, our X2A. That's a horrible drawn A. I then want to bring out my Fibonacci retracement, and I want to see what Fibonacci ratio does my B leg come to. So my B leg comes to a 50% Fibonacci, where at the time it puts me on alert for a potential bat pattern. But as we violate the A leg and this becomes my C, that's going to eliminate this from being a bat pattern and put me on alert for a cipher, as long as that C leg hits my 127 Fibonacci extension, and it does. So we're on alert for a cipher pattern, and for the completion of the pattern, we would need this price chart to retrace all the way down to this 786 right here, giving me a completed cipher pattern right here at 7140s, and being valid all the way down to 7116. So this is going to be pattern number A, right? Don't type in your vote yet. Let's see B. Pattern number B, we're going to adjust these fibs a little bit. And instead of taking an X point down there, I'm grabbing the wrong thing here. I need to get rid of that. There we go. Instead of grabbing an X leg down here, we're going to move that X leg a little bit higher to right there. So our X to A is going to be like this, swing low to swing high. Our B is going to stay the same. Our C is going to stay the same. But because we have that higher X leg, we need to adjust this Fibonacci retracement. And that's going to give us a different pattern completion point, which again is going to be, sorry, I'm confusing guys, trying to draw two things on at once, is going to be from our 786 down to our new X leg right here. So I would love your opinion on which pattern do you see this as. Pattern A with the completion zone down here, so the bigger blue straight lined one, or pattern B, the one that is shaded in. I can tell you that there's no wrong or right answers. This is the thing about discretionary trading. It is subjective. But what we're trying to do with our traders is, one, when we play this game, if there's anything that is completely invalid, they need to know that right away, where it's like, hey, this is flat out wrong. But our job is to help you to develop your eyes as consistently as possible, meaning that you want to see the same type of setup each and every time. That way, when you go into your testing, you can actually get data that is relevant to what you're seeing. But the problem is, right, until you work on your eyes and develop your eyes, you can't do that. So it's at this part of the process where we want to have these discussions about, hey, why did I take that as an A leg? Or why did I take that as an X leg? Why did I choose that over that, as traders start to discover themselves? So I think this was a cool discussion point right here. Let me know in the comment section below, is this B? Is this A? I will leave in the comment section below which one I personally have this as on my radar. This is a bullish entry, by the way. All that to be said, this is you buy at the 786. Yeah. Now, real quick, speaking of our live room and our Q&A sessions, if you guys ever want to join us in the live rooms, we have a London session and a New York session that we run 3 times a week. Just head over to www.tier1trading.com. It is part of your 14-day risk-free trial membership, meaning you get 14 days on the platform to try us out, talk to the community, join the live sessions, and see if we are the right fit for you. And if we're not, you simply lose access after 14 days. So there's no like scammy auto bill or anything like that. So check us out, www.tier1trading.com. Join a like-minded community of traders that think and act like you and enjoy the same things that you like, since usually people don't know what trading is and it's a very lonely space. So come find friends. Aussie Canada is next, the sideways consolidative pair that has been oddly directional for the better part of this year. But we're back and we're looking at a consolidative setup here. So you can see that Aussie dollar has done a few things. Right here on the lower perspective chart, you can see that we just broke and closed above a previous level of structure resistance right here. Now, if we just draw a line at the very top here and head out to, oops, that's not what I wanted. Draw a line, here we go, Keel, at the very top here and head one more time frame higher to the daily, you're gonna see that we are actually at another previous level of structure, right? You can see the highest close right here. So pretty much we are stuck between a previous level of structure support and a previous level of structure resistance, hence why the market has bounced up here, reversed, then bounced down here, had a think, and then reversed, and then bounced up here, and couldn't get past it, and now bounced back there. Now, I do not know how long this will happen. Consolidation leads to expansion, so at some point, this will expand higher, but you can certainly, for you channel traders out there, I get that all the time. Akil talk about, ooh, my voice is cracking, sorry. Akil talk about channel trading. And I'm like, I'm not really a channel trader, so those opportunities don't really come to my eyeballs. Well, this one is for you. As we drop down to the hourly, this is gonna be another opportunity to trade across the channel. Now, although I'm not a big fan of channel trading, what this does is this offers a massive opportunity. Why? Because we know where we're wrong, right? We are wrong right below here. If price action goes below that level, we are wrong because we have busted out the channel. So we know that that's our expectation. At the same time, if we are right, where could you be right to? Well, you could be right all the way back across this channel. And you can see it just offers a massive risk reward. Now, obviously, you got to figure out how you want to enter the trade. Do you want to be a breakout trader? Do you want to wait for a higher high, higher close? You want to double bottom? I'm going to leave that part up to you. But you can see that the market is within this period of consolidation. We've bounced back and forth. We've held each time. It's a really good setup if you're just looking to take a shot on a trade, low risk, I would say, with a high risk reward ratio, meaning that if you lose, it's not that big of a deal, but if you win, you can make some pretty good buck out of it. So channel traders, you're welcome. I finally got you one. Short and sweet this week, but I got more in the hopper coming up early next week. I got a cool video in store for you on morphing patterns in a rules-based way that will tell you when to change a pattern and when to stick with an original pattern. So keep an eye out for that early next week. And of course, awesome episodes of the Trading Coach Podcast have been coming out. There's a really good video episode called Beat Fear, which have gotten some really, really good comments. So make sure you watch that if you're someone that deals with fear in the market, which is everyone. So yes, you should go watch or listen to that. All right, enjoy your weekend. Go Toffees. Take care.
Best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.